Hi, Hayden. Can you give us a bit more colour and help us understand then the potential merits of a tie-up between Gold Road and Regis Resources, which, as I understand, is the next cab off the M&A rank?
Certainly been speculated in the press that was going to be the case. Whether that plays out will be interesting, particularly given what we saw in the last 2 days with Gold Road's JV partner Goldfields moving on to Cisco in Canada, probably taken away, I guess, any potential tie-up between those two companies in the short term. But Gold Road has a single asset. They're not the operator Goldfields is. And for Regis, they have some underground mines, but also another significant project called Tropicana, which is actually owned and operated by Anglo Gold. So there's some similarities between the two companies and the fact that they're better at the most significant assets are things that they don't operate. So potentially tying together what is effectively more of an investment portfolio is, I think, where that speculation has emanated from.
Hayden, I know that gold is having a bit of a renaissance at the moment, but isn't the real action with nickel, copper and lithium, the green EV metals?
Well, I think gold has benefited the fact that its commodity price has been rising, where certainly in lithium and even copper in the last month or so, and nickel certainly has been quite volatile, that the opposite has been the case. And, businesses have become quite stressed. We've seen production cuts through lithium and certainly through nickel and big closures of assets here with the likes of BHP's Nickel West business that have cast a shadow on that part of the market and caused significant share price underperformance. So, yes, there certainly might be stronger opportunities in some of those areas given how weak those share prices have been. But it's really gold that's got the lustre of generating strong cash flow. And I think the key difference here is for gold, the price had been rallying for a fair amount of time, but it's really been a consolidation phase in the last 3 months. So, as evidenced with the Barrick numbers last night, you are going to start seeing some pretty material cash generation being delivered. And I think gold has surprised to the upside in terms of where consensus was as well. So we're also starting to see further gold price upgrades from the street and as a result, upgrades to the earnings outlook as well for most of the bigger producers.
So let me pin you down, Hayden. Give us some numbers. Where do you think the gold price will be, say, this time next year, in a year's time?
Well, I was going to say about 2,500 by the end of the year, but that's almost happened overnight given the move we've had. I think the uncertainty as to the direction and pace of interest rate moves in the US and how that tracks versus inflation will continue to be a big driver of where gold goes. If that uncertainty remains through to the election, I think you'll see gold prices push to 2,500 and beyond quite comfortably. It'll be once we get into a directional cycle in interest rate moves, most likely down, obviously, that I think gold may well start slowing down its gains, but that'll also be dependent on where inflation sits. If inflation remains an issue throughout economies, then generally you see money printing as to try and offset some of that, and in reality, and probably the cause of it, and generally that is what's driving gold prices higher. So structurally, it is still a pretty good environment for gold, although the moves we've seen in the short term have probably taken what I would have considered to be the near-term upside away in some respects, and 2,500 is still a comfortable target for me towards the end of the year, but we're getting pretty close to it now.